If you dream of financial freedom, crowdlending is a topic that you must be familiar with. Crowdfunding can transform you from a customer into an investor through innovative P2P service platforms. And this is one of the best tools for beginners to understand how investing works and the simple correlation between risk and return of investments. For experienced investors, marketplace lending is a great way to diversify their portfolio, as those assets have little correlation with the stock market. So in today's video, I'm gonna cover this topic. Consumers have recently begun to play a new role in some markets, that of providing capital and investment support to the offering. This phenomenon, called crowdfunding, is a collective effort by people who network and pool their money together in order to support ideas by other people, usually via the internet. This can include loans for companies, participating in a business startup, co-acquiring a property, or financing social projects. Crowdfunding projects thus cover a range of areas. That said, they all have one thing in common. Typically, a large number of people provide an amount that is often small, enabling the project to be raised. Direct, internet-based communication between those providing funds and those seeking funds is a key element of all types of crowdfunding. Crowdfunding is a way of alternative finance and can eliminate the banks. Then we have crowd investing. Instead of funding a project, the purpose of crowd investing is acquiring a stake in a company or property. In the business crowd investing subsegment, this form of financing is particularly suitable for businesses in early stages of development, for example, startups. The first name that comes here is Kickstarter. With real estate crowd investing, investors become co-owners of a property. Rather than individual freehold apartments, co-ownership involves purchasing a percentage of an existing tenanted property. As a result, the investors take a stake in the rental income and in any rise in value of the property itself as and when it is sold. Example, Reinvest24. Crowdlending refers to financing businesses and individuals in means of loans, borrowed capital. The investors receive interest based on the risk category of the borrower. Crowdlending is also referred to as a peer-to-peer, P2P, or marketplace lending. The term peer-to-peer was established in the UK, while the term marketplace lending is more used in the US. When we look back in time, crowdfunding has a long history, with several roots. Books have been crowdfunded for centuries. War bonds are theoretically a form of crowdfunding military conflicts. London's mercantile community saved the Bank of England in the 1730s when consumers demanded their pounds to be converted into gold. They supported the currency until confidence in the pound was restored, thus crowdfunded their own money. But let's get back to nowadays. The first ever worldwide launched crowdlending platform, named Zopa, was launched in the UK in 2005. By the way, if you want me to prepare another video about how the oldest P2P lending platforms performed during the last recession we had, write down a comment so I will prepare a video in the next weeks. While this investment method started in the UK in 2005, it was developed all over the globe, mostly on three main markets. Asia market holding 84% with a share of 420 billion transactions, and then we have the Americas with 12% market share and Europe with 3% market share. The last is 1%, being countries such as Africa and Australia. The European crowdlending market has grown from 1.2 billion US dollars in 2013 to 15 billion US dollars in 2018, representing yearly growth of 70% on average. The market growth is expected to slow down in the next years, growing to 38 billion in 2023, representing a forecasted yearly growth of 16% on average. There are three main categories of loans you will be able to invest in: consumer, business loans, and real estate loans. Consumer loans are usually used by people to buy consumer products or do small spending such as buying a car. You can invest in projects of businesses and companies, for example, cryptocurrency farm, restaurant, consumer goods business, startup company. Then we have real estate loans. Now you might be confused as I mentioned real estate for a second time in association with crowdfunding. Let's look again at the table. The difference between crowd investing and crowd lending is the fact if you get interest payment or a part of the profit, rental payment plus value growth. You can invest in different real estate projects: new real estate development loans, buy to resell loan, for example buy an apartment, renovate it, resell it and make income on the plus value. The modern crowd lending model is generally based on three types of actors: the project initiator, who proposes the idea or the project to be founded, or also called loan originator. Then we have individuals or group of people who support the idea, investors. And at the end we have a moderating organization, the platform, that brings the parties together to launch the idea. This crowd lending investment methods holds a lot of advantages such as investment possibilities, flexibility and risks. But hey, I spent already 7 minutes explaining you what P2P lending is. What is the idea actually? Let me give you concrete examples from my life. I owned a bank 17,000 euro for my mortgage loan and I paid 3% interest rate. So this means every month I have 45 euros roughly as an interest payment to the bank. At the same time, for every 1,000 euro that I have invested on Mintos, I get roughly 12 euro per month. This means if I build a portfolio with 4,000 euro, I will be able to get the same amount that I'm paying to the bank every month as an interest. And don't get me wrong, the idea is not to take a loan and to invest it in Mintos. No. But investment in P2P lending has a lot of risks and eventually your money could burn like this sheet of paper. In first line you have the borrower default. It happens when the borrower can't pay anymore for the interest and can give you back the invested amount. But there is a buyback guarantee on some of the platforms, like for example Mintos. Also you have loan originator bankruptcy. This happened several times also on Mintos, like Monego and Varks. Still we were able to get most of our amount, what we had to wait. And the next risk, which is the biggest, is crowd lending platform to get in bankruptcy. This happened with Kutsal and Investio, and recently we can add another name to this list, is Groupier. This was a really big platform and nobody actually expected it to get bankrupt. All of these platforms just disappeared and it's really sad for the investors. Another YouTuber, Angelo, made very interesting videos and very informative about why Kutsal and Investio got bankrupt. I couldn't have explained better myself, so I'm putting a link to those videos if you want to hear more about this. Now let's get to the point. I'm gonna give you the criteria you need to check before investing in a P2P lending platform. On first place, you have the track record. I prefer platforms that have a track record for at least 3 years. Check how many employees the company has. Is it profitable? On the next point is the regulation. You have to check if the platform is regulated and on which market. What is the name of the agency regulating the platform. Then we have the return on investment. The P2P lending platforms can be divided roughly in 3 categories according to the return on investment. So we have lower risk companies, mid-risk, and also higher risk companies with higher return on investment. I personally recommend you investing in lower risk P2P lending platforms like Bondora, or in middle risk like Mintos, although on Mintos you have a wide range of loans and you can choose. Some platforms say yes, they are open to international investors, but they really mean only large institutional investors. Or they mean expats because they require a local bank account and a local passport. What I mean with open is that the platform is allowing foreign nationals that reside in a foreign country and have a bank account outside the local market to invest as a retail investor in P2P loans on the platform. Currency risk and money transfer. The cross-border investors have additional risk. Currency rates fluctuate. We are lucky in the Eurozone that we have the SEPA payments, which are almost free. But you can use also Revolut, which I have mentioned in my previous videos, and also TransferWise or other innovative solutions to transfer your money. Then you have to consider the loan terms and loan types. This has to deal with another important question: liquidity. Investors usually cannot cancel investments once committed and need to hold the loan until maturity, unless they are able to sell to another investor on the secondary market. So money is tied in, illiquid, for the term of the loan. However, many platforms use amortized loans, meaning part of the capital and interest is paid each month. Diversification is another important point when talking about P2P investing. When you spread your investment in small chunks of many different loans on a platform, then you reduce the probability that your portfolio is an outlier compared with the average portfolio performance on the platform. So the more you diversify, the more you reduce the probability of your yield being much lower or higher than the average yield of the portfolios on the platform. Diversification can be achieved faster on platforms with many comparable consumer loans and will take longer on property platforms which launched only few property loans, which are larger. And it sounds more time consuming than it actually is, because most of the platforms offer an auto-invest feature. Next point, cashback bonus. While you shouldn't select a platform by who is offering the highest bonus, it's certainly nice to get a bonus if you decided to invest in this platform anyway. So I'm gonna describe the bonuses that you get. On Mintos you have 1% cashback bonus for the first 90 days if you use my referral link, and on Bondora you get €5 as a welcome bonus. If you would like to get started building your own crowd lending portfolio, you must search for as much knowledge about the platforms as you can. And I will leave some of the terms related with crowd lending to you, like compound interests, unsecured and secured loans, cash drag, and taxes. I will share everything that I have used for this video on my channel to inspire you. And bear in mind, I'm not an investment advisor, and the risk you take is yours and yours alone. I'm just sharing my own experiences in investing in crowd lending, and I hope my learnings can give you some insights if you want to get started or expand your current portfolio. Thank you for watching, and now I'm gonna answer one question that was asked in my previous video about gold investments. Georgi Babev asked me how to invest in gold. So there are a few options, Georgi. One of them is to buy physical gold. On this way you would eliminate the third parties and you'll carry one risk less. Another option is of course to invest in gold indexes using some platforms or innovative banking solutions like Revolut. I have mentioned this name many times before, but for now the Revolut option to invest in gold is just for premium members. So thank you for asking me questions. I will try to answer all of your questions.